as the market pops up on 9th May 2022. As temperatures rise, turbulence sets in. This week, out of turbulence, there has been an air accident too. The turbulence of rising prices was too hot for the RBI. Though last month at its April 8th meeting, the Monetary Policy Committee had sounded too confident in taming the inflation within the Parliament-mandated band. And on 4th May, the Monetary Policy Committee decided to announce a mid-policy hike in repo rate as well as CRR. Despite the GST collections for the month touching a record 1.68 lakh crores and exports recording a rise to $38 billion. And the turbulence spilled over to the markets, with Nifty losing more than 4% week over week, and the 10-year benchmark Indian bond yield spiking to 7.45%. The options volatility also closed above 20 levels. The Indian rupee too depreciated sharply on Friday, closed at 76.89 against the US dollar. During the year, rupee would have depreciated more had it not been for the Reserve Bank of India to draw on its war chest of reserves of dollars and draw more than $40 billion to even out the pullout of more than 2.5 crore lakh of rupees from the Indian equity markets by the FIIs. The WSS data for today showed the dollar reserves dipping below the 600 billion mark, and it was at $597 billion. The relative fall of stock indices in the US over the year has been more than 30%, while that of Nifty has been about 20% only, leaving a worrying gap among investors. Similarly, on the interest rate front also, the gap between the benchmark 10-year bond yield and the benchmark 3-year IRS was, even as late as last April, more than 100 basis points. But this has suddenly shrunk to 40 basis points. Is this a pointer towards rising yield expectations? And will this add steepness to the yield curve? That is the million-dollar question. Overseas, the US dollar index held on to the 103 levels, and gold closed below 1,900 at $1,884 an ounce, while Brent rose to $112 per barrel. The benchmark US 10-year bond yield shot above 3% and was trading at 3.09, while Nasdaq 100 almost came back to last Friday's close of 12,800. Convection currents are helpful in bringing down the temperature. Let us hope that the copybook responses from the central banks in combating inflation also set in convection currents to moderate the markets. Have an interesting week ahead.